Another 75 basis point rate hike today. It's smaller than last time, but it's still huge. If you got into a variable mortgage when interest rates were at their lowest, you're probably going to be hearing from the bank soon because mortgage payments are going up after September's rate hike. RBC tells us that there's approximately 80,000 variable mortgages that will be affected in the next couple of months. So if there's 6 big banks out there and 4 out of the 6 banks offer these type of mortgages with trigger rates, we're going to be looking at least 320,000 variable mortgages where payments will start to go up. So let's take a deeper dive into how rising interest rates will affect existing homeowners in Toronto. But before I continue, if you enjoy content like this, don't forget to give this video a thumbs up and subscribe to our channel as well so you don't miss other videos like this made specifically for real estate investors in Toronto. Here is a quick intro in case you don't know what a trigger rate is. Every time you pay your monthly mortgage payment, there is a portion that is the interest and another portion that pays down your loan. So when interest rates go up, the principal portion of a variable mortgage can act as a buffer for you. What this means is that even if interest rates continue to go up, big banks with variable rates will reduce the principal paydown that you have and increase your interest to keep your monthly payment the same. But of course, this is only possible up till a certain point. If interest rates go up too much, the principal paydown buffer might not be enough to cover that extra interest, and so your monthly payments will start to come up. The rate at which these payments will start to come up is called the trigger rate, and this is starting to happen soon after our latest September rate hike, and those most affected will be those who got mortgages at interest rate lows. Let's take a look at an example. Say you got a mortgage 9 months ago when the prime rate was at 2.45% with a discount of 0.7%. This means your trigger rate will hit when prime rate goes over 5%. The prime rate is now at 5.45%, and so it's clear that mortgage payments will start going up. By the way, if you want to get a ballpark estimate of what your variable mortgage's trigger rate is, you can head over to our trigger rate calculator, which I'll link down below. But the most accurate way to find out this number is to contact your bank. We know that rates are going to continue to go up, so let's see how much more you'll have to pay at the peak. Bank forecasts expect the target rate to go to around 3.5% at the peak, taking the prime rate to 5.7%. So soon, your mortgage payment will be $400 more than what you started with on an $800,000 mortgage. The trigger rate might actually also impact other variable mortgages as well. Take a look at this chart where you can see that those who got in after the March rate hike will still see a $320 increase in variable mortgages if the prime rate goes to 5.7%. And those who got in during April will see a $125 increase, and only those who got a mortgage after that won't be affected. So let's think about this. A $400 increase is not insignificant by any means. But when we buy freehold investment properties, we typically look for a few $100s of positive cash flow at the start, just in case. So in this case, the positive cash flow will help to absorb much of that impact, if not all of it. Condo investors are in a different boat because their cash flow is negative to begin with, and so an increase in mortgage payments will definitely make their holding power much weaker. And obviously, end-user homeowners will see weaker holding power here too because these added costs need to come out of their pocket. Now, besides trigger rates, mortgage holders who are up for renewal soon might also run into trouble. According to BMO, they see $14 billion of uninsured mortgages up for renewal over the next 12 months. If you multiply that by 6 big banks, we're looking at $84 billion that might be impacted. Most mortgages are on a 5-year term, so according to Rate Hub's discounted 5-year fixed rates, the current best fixed rates now are at 4.24%, and in 2018 it was at 3.19%. So there's a bit over a 1% difference here. The bigger damage will be on the variable side because variable mortgages in 2018 were at 2.25%. And in contrast, these rates might go up much more to 5% soon. Now remember, rates have gone up, but there's 5 years less in your amortization period now, and your loan amount has also decreased. So there is a bit more flexibility here to drop your monthly payments if the amortization period gets extended back up again. And if you do that, the monthly payment on an initial $800,000 mortgage might go up by a lesser $700. That's still a big bump for end users and condo investors, but in this case, condo investors will be slightly better off than end users because rents have come up since 2018, which helps to improve cash flow. Again, freehold investors will be the least impacted here because they have positive cash flow to begin with. Rents have also gone up, and both of these act to give a bigger buffer to cover the big increase in mortgage costs. So if we look at the big picture, here are a few takeaways. Cash flows are key for strong holding power, and investors do have an edge over end users here. Then within the investor pool, multifamily homes have better cash flows compared to single-family homes, which do better than condos. And finally, time in the market is another factor that can help you improve your holding power. Over time, your loan amount drops and you'll have more flexibility to lower your mortgage payment amounts by extending the amortization period. At the end of the day, markets with better holding power means more price stability in the coming months, and unfortunately, condos and markets with more end user homes will likely see bigger drops in the coming months. So if you're thinking about buying the real estate dip and you want to understand more about what's happening in Toronto real estate, we're happy to chat. We're a real estate sales brokerage that focuses specifically on investing in freeholds in core Toronto. And so we can help you see things more clearly and match you up with the best investment property that fits your needs. After we help you buy, our team also provides renovations guidance, leasing, and property management if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.